Good evening, ladies and gentlemen, and welcome to our evening session today. It's me, Mathew, and today I want to be with my colleague, Edwin. We'll be speaking about getting set, or the things that you need to do as you're having an effective start in Forex trading. So just buckle up, sit tight, prepare your questions, and let's engage on the platform. On the questions side or the chat side of the YouTube, just post your questions there. I will be able to respond as we get along. So today I want us to start our conversation with how do you manage your expectations, for instance. You see, last time we say that you are looking at the markets sometimes when you're beginning based on how you got in. In this sense, how do you get introduced to this market? You're expecting to be making a lot of profits. You're expecting to get rich quick, and that's not the way. So as you shed off that mindset, we also need to keep up to speed with the market events, right? So the thing here is you want to understand this market, right? You want to know the likely direction of the market, for example, the likely patterns, but you also need to understand that every financial instrument has got aspects, economic aspects, political aspects that really affect it. So in this event, for you to start effectively, for you to be able to make profits in the market, for you to be able to take positions in the market, educated positions in the market, or educated trades, then you need to understand the events which are happening around a given financial instrument. For example, if you're trading with Euro USD pair, or you're trading with gold, or you're trading with oil, then of course that specific financial instrument is affected by the happenings or the events that take place in the particular economy or in the countries that produce or that, of course, that financial instrument belongs to. For example, if it's the US dollar, the events which happens in the United States, be it political, economic, or even participation in geopolitical aspects, they are going to affect the strength, right, or the weakness of that currency. And you as a trader, you'll be looking for opportunities to buy a financial instrument like a currency that you're expecting to be rising or to be getting stronger. So if that country is having an economic event or an economic report that is likely to cause strength in that economy, then it's likely going to affect the currency in that it will make it strong as well. If let's say, for example, a country is having a report being released and it's showing weakness in its economy, then it means that that country's currency is likely to weaken, and traders are going to find opportunities to short that financial instrument. So as a trader, for you to be effective in the market and even having more confidence in what you're trading, then you need to have knowledge on trading with the fundamentals. Okay, so by a very great extent, of course, the economic data releases and the political events affect the strength or the weakness of a given financial instrument. And of course, at the moment, we've got an easy example to give. For instance, all the traders, I don't think there's a trader who doesn't know that we have a conflict in Europe, where we have Russia having a conflict with Ukraine, right? And the developments around that event, that geopolitical event, is causing changes in the financial instrument, specifically oil, right? Because Russia is a big producer and exporter of oil, right? And even natural gas and wheat, right? So once you understand the events, that fundamental aspects happening in a given country or a region, then you're able to have more confidence in speculating on the given or the associated financial instrument. And it's not happening only on a commodity. It will cut across every financial instrument, not only on currencies, not only on commodities, even on equities or stocks, right? Even on indices, right? Depending on where that information is happening. So to be an effective trader, right? To be able to speculate well in the market, you not only need to understand the technicals, but also understand the fundamental events which are happening around around that financial instrument. Yeah, Sam, I see your comment there, a little bit late, okay, but still we'll be able to cover as much. Bring your questions, let's look at them. For the case of technical traders, of course, you're looking at the movement of the prices, right? Historical movement of the prices, and those patterns that you're building your skill on to be able to speculate. So the question is, most of the traders is something that we can argue about between traders who use technical analysis and the ones who use fundamental analysis. Which one do you think is more profitable, or where do you think you can rake in more profits? Well, we can as much argue so much on that topic, but the point I would want to pass across is that as a technical trader, you need to understand the fundamentals around the financial instrument that you are analyzing their charts, or that you're looking for that trend or downtrend or the volumes in between for you to get or squeeze in some trade. So if you have a reliable trading strategy, which is based on technical indicators, and of course you find an opportunity, if you have even additional information on what is happening for that given financial instrument, then it's going to give you more confidence, right? It's going to confirm more on or give you more confidence on your trading strategy, right? If you're getting an uptrend, for instance, and for that financial instrument, you're getting reports and news which are confirming strength of that given financial instrument, then of course it's going to give you more leverage in the market than someone who is trading only on technicals and does not understand the likely events which are about to arise. Another scenario is where your technicals are confirming a trade. Okay, you find a very nice break of a trend, but then you do not know whether there is a release which is coming up, right? An event coming up, a report coming up. So if you do not know there's an event coming up, then probably you're going to place a trade even a few minutes before the report is coming up, and that's going to expose you to a risk which you're not prepared for, and likely your trading strategy is not going to be effective at that time because you did not factor in the likely movement or the spike or a very fast change in the strength of a given financial instrument that can cause a risk in your capital, right? So in as much as you not want to use the fundamentals as part of your trading strategy, then you want to keep away from the risk which arises. And of course, when the risk comes or when news are released, depending on whether it's very surprising or based on whether it's very strong news or very positive news or very negative news, then you want to avoid that whipsaw, right? Or that big spike which can definitely wipe out your account if you didn't have a stop loss, or even if you had a stop loss, it might be reached quite fast. Okay, and around the news, of course, you might also suffer from slippage which comes up. Okay, so technicals might show a lot of confluences in the market, might be giving you a very strong indication that you're getting a short position, which is giving you a higher probability of a trade. But any impeding or any upcoming data release might have a consequence or might affect the movements in the markets. And as a trader, you want to know that you want to be an all-round trader, okay? Not someone who is just has knowledge on how to use moving averages or any other type of trading technique without factoring in the fundamentals. Of course, the fundamentals are the ones that influence how strong or how weak a given financial instrument is going to be. That's really important. That's most of the time that's what we see on the charts, right? And the movement in prices or the chart patterns, that information is more influenced on how strong or how weak a financial instrument is from the producer country, right? Or the economy that the currency belongs to, for instance. So when we talk about the financial instruments, right, we talk about you being on top of the game by using the fundamental events, okay? We're not talking about you looking at a specific currency and researching about that specific currency or a currency as a standalone currency, right? You're looking into an economic calendar where all the events are lined up, for instance. Yeah, you check out the economic calendar, you realize that every single day, every country which has got an event that is going to affect the financial markets, that financial instrument, it's lined up. So what happens is you're going to filter out based on your selected financial instrument or the news that you find are most important. So traders in the market will go to a calendar, economic calendar, and they will select, for example, to see the news, high impact events or high impact news, or even the medium impact news, because they really can move the market, especially if you have got medium impact events, several of them lined up for a given financial instrument. So in that event, you filter out based on the selected financial instrument. For example, you might be a trader who is just interested in trading the pound, right? Or the euro or the USD. So what you're going to do, you just filter out events, high impact events or medium impact events for that specific currency, for euro, for example, or for pound, for example, or for Australian dollar, if that's what you want to see. And you can as well select the reports that you think is what really fits your trading strategy. If that's what you think is going to inform or give you more confidence in your trading, then you would want to filter out that. So you look at the data which you really consider most important for you as a trader, because again, traders have got different styles of trading, and there are tools that you consider most important for your analysis or for your trading strategy. So the same way, you can choose the events that you consider even better to work with. So always check out the upcoming data releases throughout the week. Okay, it can inform you where there is likely rise of volatility, because of course volatility comes with opportunity, right? Or on the other side, it can as well come with risk. So you want to be informed so that as you're looking for the opportunity, as you want to get hold of the opportunity, then as well you want to understand or you want to know how best you can manage your risk in the market. So part of the events, and of course this one happened like a couple of days ago, right, where we had speakers, or Jerome Powell speaking for the Federal Open Market Committee. Okay, so when he is speaking, of course, he's speaking about what the vote was for the various Fed regions, right? Once they vote, what is the outcome? Okay, so that one is likely to give an idea on where they're moving in terms of the interests. For example, the US federal, the FOMC, yeah, they raised the interest rate for the US. Okay, what is the implication of that one? It increases the strength of the dollar. Okay, and the implications again is it's raising the cost of borrowing. Okay, how is that one going to affect the stocks? Not only the currencies, how is it going to affect the stocks? How is it going to affect the NASDAQ, for example, the tech stocks, where of course, you know, most of them, they are, most of the tech stock, of course, you know, they are the, what we call them, the young companies, okay, blue chip companies that are quite innovative in the market. And most of the time they will rely on a lot of of borrowing, right? How is it going to affect them? So with that knowledge in the market, it's going to lever up or leverage, give you more leverage once you're using the technical analysis. Central bank interest rate setting meetings and announcements, of course, they can be of great importance. And such other important events will include meetings, right? Especially when we're talking about geopolitical events. Like, for instance, the conflict we have in Europe between Russia and Ukraine. You realize that leaders will be coming together, and they've already started. They come together to try and deliberate and come up with a resolution. So something which is easy, and maybe something which you can speak directly about, is if, for instance, they speak and come up with a resolution, then it means that the conflict is going to be controlled. If the conflict is controlled, then it means there is more of the anxiety which was in the market reduces. Okay, the cause of alarm, or what was causing investors maybe to feel like there is a lot of risk in the market and they want to go to safe haven financial instrument or assets, then that one is no longer the case. If it happens that the meetings or geopolitical meetings, especially by the G20 countries, is causing the conflict maybe to subside, right? But in the events where at the end of a meeting, then it comes out that there has been disagreement, it has even exacerbated the already happened conflict, then what happens? Then the fears rise, okay? The volatility in the market again starts up, okay? And having that knowledge, of course, gives you more leverage in the market, right? It's very important that we understand it. So as traders, you want to understand, even as you're doing technical analysis, you want to, of course, be aware of the events which are coming up in the market, right? So, of course, check the technicals, and in as much as you want to rely on them, okay? Because, of course, if you're using a chart and you've not even seen the trend, you've not even analyzed anything, that chart might be very meaningless, right? Don't misquote me. What I am saying is, whether you're using fundamental analysis, you need to at least look at the chart patterns, maybe the candlesticks, right? Look at the patterns they are making, want to see the technical areas, okay? And traders would want to agree with me that if you cannot add a tool in the chart, maybe use support, resistance, or even look at the chart patterns, like there are various chart patterns that can show continuation of a trend or can show reversal. Whether you're using chart patterns or you have tools like indicators you're using in the market, those are the technicals that you're looking at, right? And it's important that you bring in the fundamentals, because you want to be a wholesome trader. You don't want to be someone who only understands that this is a trend or this is a reversal candlestick. Why is that reversal happening? Why is that trend so strong? Or why is it that you're having a very strong and high momentum bullish market, or a high momentum bearish movement in the market? So having that knowledge about the fundamentals of the market is going to give you more leverage in or add more strength, or give you more confidence in your trading strategy, which is based on the technicals in the market. So whether the market is trending or is confined in a range, those are the technical things we're going to look at. Are key support areas, price levels in relation to the moving averages and trend lines, looking at the swing highs, maybe to have your stop loss areas. Of course, you want to consider the events happening up in the markets, right? And today I'm alone here, and I just want to engage you straight, right? Boniface anasema niko locked, right? You're locked in here. That's awesome. Throw in a question that you would want me to respond to, okay? and I'll be glad to speak to you on that subject. Of course, there are various platforms that you can check out for news, and specifically for us at FX Pesa, we provide you the Acuity, right? There's the Acuity terminal where you're able to check out for the events, all right? We will specific. It's a really detailed platform where we need to look at a lot of details. I will make sure to present it someday, okay, so that we can understand more clearly on how to use it. But what is coming up even in the few days, right? Just in the near future, we'll be bringing you the Acuity signal center, right, where you're able to view these various events and how they are affecting the movement of the financial instrument. It's something you're able to view on the Acuity research terminal already, okay, on the economic calendar. The good thing is that you can even install it on the MT4, right, and be able to check out news as they come, and maybe once they've been released, the impact they have in the market, and it's going to make you even a better trader, all right? And that's what you want to be, an all-round trader. You don't want only to rely on one specific or just one given trading style, all right? So, ladies and gentlemen, that is much of what I had, unless I check out for a few questions here, and I see no any question, right? Simon was waiting to learn. Maybe Simon, what were you expecting to learn today, right? Might have a question, yeah, so they can look at it. That would be awesome, right? So, ladies and gentlemen, with that short conversation, if I don't get a question, I think we'll wrap it up. But I see someone is asking, Boaz is asking, which app or rather website can I use to know the news are coming and how they are going to affect the market? All right, that's what I've just mentioned. Boaz, that's a great question, by the way. And which website can you use? Actually, just to give you information, I don't want just to limit you to the one that we are using, to the app that we are using already at FX. When you go to Google and search for an economic calendar, right? Any economic calendar, just economic calendar, and you're going to find a list of so many of them, right? And you're going to filter out the events based on what you find easier to use. But the common plan, set plan, the common arrangement, and the common data you will find is you find the date of release, right? The date that you're expecting an event will be released, right? And you also find the country that you have the data being released, right? The country for which the data is being released. For example, is it the central bank? Is it the European Central Bank? Is it the Central Bank for Mexico, for example? Is it the Bank of Canada, right? So what time is that data be released? For which country, right? If it's Canada, for instance, and what is the report, the actual report which will be given? Is it about the inflation? Is it about, because when talking about inflation, then you're speaking about data like CPI, the consumer price index, you're talking about producer price index, right? There are various classes of data you find there. So given which type of report will be released, okay? And then you're given the previous reports that you're going to compare, right? You compare which one is going to be, which one is likely to, so that you're able to know whether it's better than you are expecting or worse than you are expecting, which is going to amount to, is it good news, or is it positive news or negative news? Usually, if the news come up, if the report comes up better than you were expecting, then of course it's positive news, and they affect the financial instrument positively, right? Or make that financial instrument stronger or appreciate. If it's events, if the events report comes up better worse than expected, sorry, then it means that it's likely to cause a shrinking of that financial instrument. But it depends on the specific piece of event which is coming up, because there's an event where you have a lower number indicating strength or improvement, or a higher number indicating worsening. For example, when you're looking at employment or unemployment numbers, okay, another type of information which is very important. All right. So I highlight the types of trading strategies that are relevant. Okay, that's a good question, Boniface. On trading strategies, of course, there are so many trading strategies, and they are all relevant, by the way. There's no one trading strategy which is not relevant. Okay, they're relevant. What matters is, you as a trader, have you taken time to understand and really know how to apply that trading strategy? Let me say that every trading strategy you find in the market, they work. And that's why they are trading strategies. Maybe the question should be, do I really understand this specific trading strategy? Okay, do I understand the technical aspects that I should use to apply this trading strategy? Should I be applying this? Should I be applying this trading strategy when I have events coming up? Because there are trading strategies which would not work at times of high volatility, especially when we have events coming up. And there are trading strategies that work best when there is high volatility, especially when we have events. And those are examples of like straddle trading strategies, right? When there's very high impact news coming up and there's high volatility. Of course, I would be going deeper into trading strategies. That's what we will cover on one of let me check out the day when we'll be covering that one, so maybe you can prepare and attend, right? And we look deeper into it and we can answer more questions. Of course, on Wednesday, when we're looking at securing the bag, that's when we look at different ways that you can use various tools. You can combine them to form a trading strategy, give you an example and how you can use them. We will be going deeper in that, and that day we'll be having my colleague here. The conversation will be more heated up and even more interesting. Okay, so trading strategies, there are so many. We will look deeper into them on Wednesday, right? Eric, hey, saying you should have a competition and for the most successful trade of the year. Of course, thank you so much for that recommendation, and of course the management is hearing this, and I'll pass over so that, of course, we can have a trading competition, right? If it's a question coming up, we can organize for one, right? And have the best one being rewarded. A little bit on a margin call. Good question. I can answer this one because, yes, it's relevant to our conversation today, because when you're getting set, when you're starting effectively in the market, what you're trying to limit yourself from, you're trying to protect yourself from losing all your capital all of a sudden, just when you're started. That is the worst nightmare. And that's the reason why we say you get set or you have an effective start. So how do you get set, right? Making sure that the other day we say that you make sure you have a trading strategy, and part of you developing a very effective trading strategy is being able to understand the fundamentals in the market or the events coming up, and being able to merge it together with the technicals which you're using. So yes, of course, I'll talk about margin calls, so that if you're not able to understand the fundamentals in the market, right, you're not able to you don't know even when events are coming up, high impact events that can move very fast and drive you to a very big loss, then sometimes you get a margin call. And most of the times, the traders who do not understand when we have high impact events, they are the ones who suffer stop out, margin calls, and later stop out. So let me answer the question straight. What is a margin call? A margin call is the notification that you get as a trader right? The notification you get as a trader, either through a text, because in our end, or in our case at FXPesa, we send you a text or we send you an email to notify you that, hey James, or hey trader, your equity, right? Your equity is at 100% with the required margin, right? If you place a trade and the required margin, let's say for example, is 100, for simplicity of to make this one simple for you to understand, if the required margin is $100, maybe you had $1,000 in your account and you've placed a trade where the required margin or the margin for that trade is $100. And then once you place the trade, it goes into a losing streak, right? Such that your equity is eroded continuously, right? Maybe there's a high impact event that you did not know, and your technicals agreed to your trading strategy. Let's say, for instance, you made another mistake. You never used a stop loss, okay? Or maybe it happened so fast for the people who place trades before you place a stop loss. It happened so fast that even before you see, you're making a very big loss, and there's a spike in the market, an event has occurred, right? Maybe it's high interest rates or interest rate hike for the US, or the case for UK, right? For the GBP. It happened those things have happened the last week. So if it happens, you didn't have a stop loss and you place a trade, and the required margin was, let's say 100, and you had $1,000 in your account, and then you're making losses up until your equity reaches the same level as the required margin, right? To repeat myself, required margin is 100, and then your equity has gone down because you're making losses to the same level as the required margin. So what happens? You're sent a notification, right, as the account holder that, hey Mathew, your equity is at 100%, right? It's at 100%, or it's below the required margin. So please top up your equity or increase your equity, okay? Increase your equity to sustain your trade in the market, to sustain your position in the market. That is a margin call. It always happens once your equity has been eroded to 100% equal to the amount of required margin, okay? So at that time, you're supposed to add more money to your account, make more deposit, or you can liquidate your position or close your position, right? And that's what a margin call happens. And to explain further, if you don't add that money and it reaches a point where the equity now goes to 30%, it has been reducing, goes all the way down to 30%, or in our case at FXPesa, at EGM Securities will offer you to go up to 30%, right, of the required margin, then automatically that position is liquidated, right? And I think that one explains more about the required margin and the margin call and being stopped out. Being stopped out is what people call blowing an account. So today's topic is really important when it comes to margin calls, getting margin calls and getting stopped out or blowing accounts, because you want to know, when am I expecting a high impact event or high volatility in the market? You need to know when the fundamentals are coming up, the economic calendar, which events are coming up, which are high impact events, and you want to be careful around it, even if your trading strategy really confirms that you have a good entry, right? So, ladies and gentlemen, I think I'm going to wrap the things up there, right? I'm going to wrap up there. Thank you so much for keeping it FXPesa, right? Keep learning, okay? Join us tomorrow again for another event, and even on Wednesday and Thursday, as we are covering more about this market. We'll be coming up with a new thing every now and then to help you understand more about this market. But even most important is you need to practice, okay? You gain this skill by practicing. You gain this skill by being in the markets. But of course, remember to protect yourself, understand when high impact events are coming up, and protect yourself from this destructive high volatility that might come and wipe out, might come and cause a margin call, right, alert, and even being stopped out. So this evening at that level, I want to say, right, before I end, another question just pops in, and I'll answer this one. Someone is saying, Stephen is asking, does it mean that for one to make a loss, someone else must lose? No, it doesn't mean that, right? But in as much, okay, yes, thanks for clarifying that. Does it mean that if one has to make a profit, other one has to lose? No, that's not the case. But you see what happens in the market is that as you're making a profit, someone is making a loss, right? But it's not designed that you have to make a loss for someone else to make a profit, right? Simply the way this market is designed is if you are buying, then someone else is selling, okay? That's what creates the market, right? That is the liquidity that we have in the market. And that's given by the liquidity providers, right? The big banks, okay? The banks which provide the liquidity. It means that they have the ready market for you. If you as Stephen want to buy, then Eric's want to sell, right? And in that case is where you have the fast execution in the market. So it actually doesn't mean that by you making a profit, someone has to be losing. No, it only happens randomly that you have a different perspective about this market and you placed a buy order, right? Or went long, someone went short, right? Of course, we are all traders. We are on the other side, right? So if the market favors long position, then someone who went short will lose, right? That is the case. But it's not designed that for you to make a profit, someone else has to make a loss. No, right? Because for the market maker, they have got they provide the liquidity in the market so that when you buy, there is a ready seller for you. Okay, that's what happens, right? And when I say there's a ready seller, just to clarify, EGM Securities is a non-dealing broker, which means we provide you the financial instrument straight from the market makers themselves, which are the big banks that provide the liquidity so that we are able to participate. And by the way, the market makers enable us as traders to participate and be able to make something out of this market, right? So thank you so much. I hope that was the last question that I was handling. See you next time. This is really exciting, engaging with you, and of course, talking about these markets. Even when my colleague is not here with me today, but really feel it's really exciting, and I'm happy to interact with you guys. See you in our workshop. See you in our next live streams, and have a good evening. Until next time, bye.